Welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you my weekly update on my real money portfolio and go through with you all the transactions I did last week that received dividends and everything else happened on this portfolio. So just relax, sit down, take a coffee, and enjoy. And so we will take a look at the week 4 of 2022. So the first month of the year is almost gone. And again, it was really a head scratcher. A lot of volatility in the market. A really roller coaster again this week. But before we start and I tell you what I did with this crazy market, just subscribe to the channel, ring the notification bell to never miss another video, and then you will get every week full insight to my portfolio. This is very seldom on YouTube, so I hope you enjoy that. And if you want to support me, then you can also do that via PayPal, Investing for Generation. Thank you for that. So let's start with the transactions of last week. And first of all, I bought new into my portfolio F5. F5 provides multi-cloud application security and delivery solutions for the security, performance, and availability of network applications, servers, and storage systems. F5 was incorporated in 1996 and is headquartered in Seattle. So it's a business out of the cybersecurity sector, a very interesting sector. The cybersecurity sector is really a very interesting sector for me, and so I took a look also in 2020 into this sector and built a watch list of around 4 or 5 companies which looked very interesting. One of them was F5, and I also made a video in August 2020 about F5 and just made a deeper analysis, go through the whole business model, the whole financial numbers. Check this out if you want to learn more about this great company. And now last week, with this little bit panic in the stock market, it was time to me to buy into F5. And why I bought into F5, let's take a short look into the fundamentals of F5. F5 is traded at a forward PE ratio of 15, so don't look that expensive, at least on the PE ratio, with almost no debt, with a debt equity ratio of 0.16, with an estimated growth rate of the EPS for the next 5 years of 12%, return on equity of 14%, the return on investment 12.4%, and a profit margin of 12.7%. So on the business side of things, everything look really good for F5. And these are the metrics you see for almost all companies in my portfolio because I invest in the business. And the business and the fundamentals of the business have to be good. The main point when I invest in companies. And then, of course, you have to find a good, reasonable price to buy in. Last week, F5 reported their quarterly earnings, and their reported earnings of $2.89 per share on revenues of $687.1 million. The consensus earnings estimate was $0.79 per share on revenue of $677.5 million. The revenue grew 10% year over year, and so overall these quarterly numbers was good, was in line. But then the company said it expects second quarter revenue of $610 million to $650 million. The consensus revenue estimate was $695.83 million. Outlook is not that good, and they also say they expect a revenue for the whole 2022 of $2.72 billion to $2.81 billion. The previous guidance was a little bit higher. So the current earnings was good. The outlook was a little bit disappointing, at least for the market. And so F5 network just dropped massively. And so I was able to buy on January 26, 18 shares for $193.68. And I'm really happy I was able to buy at these prices, because I think F5 network have an intrinsic value of around $240, and so at least when my calculation is correct, I was able to buy way under this intrinsic value. And so, as I said, I'm quite happy to buy this great company for a reasonable price, and we will see how this will work out. Then I also added to my current positions. Again, I would say. First of all, I added more shares of T. Rowe Price. On January 24, I added 6 more shares for $152.23, and so now I own 41 shares of T. Rowe Price for an average purchase price of $170.97, and so my whole position is down 12.37%. T. Rowe Price, also a company I had on my watch list for a long time, and all the time it just looked so pricey, and now it dropped really massively to currently $149. I think this will be a good investment over the long run. And also here a short look on the fundamentals. T. Rowe Price pay a dividend of 2.88% currently, with a forward PE ratio of 11, with no debt. Expected growth in the EPS over the next 5 years of 12%, and then also with high margins and high returns. A very good business. Next up, I added more stocks of PayPal. I bought on January 24 4 more shares for $155.30, and so overall now I have 44 shares of PayPal in my portfolio with an average purchase price of $178.62. And so the whole position is down 8.45%. And of course, as for every other business in this portfolio, I made a deeper analysis of PayPal. You find this on my channel. Check this out, and then you will understand why I bought into PayPal in the first place. Then I added also 14 more shares of Heidelberg Cement, my German company, in this portfolio, and I bought 14 more shares for €60.20. And so now I own 74 shares of Heidelberg Cement, and the whole position is down 5.87%. Also, Heidelberg Cement, a very solid base investment for me with a very good stable dividend, and so I'm also quite happy to buy into Heidelberg Cement at these current prices. Then I also added to my position in Snap-on. I bought on January 25th 4 more shares for $204.93, and now I own 36 shares of Snap-on with an average purchase price of $213.91, and this position is down 3.19%. Also here a short look on the fundamentals of Snap-on. Snap-on, good dividend payer with a dividend yield of 2.75%, with almost no debt. Debt equity ratio is only at 0.3, with a estimated growth in the EPS for the next 5 years of 10%, and then also with good profit margins, good returns in the double digits. Very good business. And that, of course, the reason I bought Snap-on in the first place. And also here I had to have a lot of patience. I had Snap-on also on my watch list for, I would say, over a year, maybe 2 years. And then lately the price just came back a little bit, and then I used the chance to buy in under my calculated intrinsic value, of course, with a margin of safety, and so hopefully this will work out over the long term. Then I also added to Medifast. I bought 4 more shares of Medifast on January 25 for $191, and now I own 19 shares of Medifast, and I'm down 2.39% with this position. Last but not least, I also added to my position in my insurance company Allstate. I bought 8 more shares also on January 25 for $120.95, and so now I own 47 shares of Allstate. So also here, very good dividend payer and a stabilizer for my portfolio in this really difficult times. Then take a look at the dividends. And last week I received my dividend from Scotiabank, the great Canadian bank with a very long and stable dividend history. And I received my quarterly dividend of $70.92 of Scotiabank last week. Very nice cash flow, stable cash flow every quarter. Then I was also able to deposit a little bit more money into this portfolio because, as I mentioned also in other videos before, over time I just move my money from Comdirect to Interactive Brokers. With Comdirect I have my European or almost German portfolio, and every time when I sell something there, then I just move the cash to Interactive Brokers. And last week I sold my stocks in Krones on this portfolio, and I gained there around 34%. And then I also sold my shares in Airbus with a performance of 87%. So also here very, very good. And I sold these two stocks out of this portfolio just because they really gained a lot over the last few months. And for me, it looked like they are over their intrinsic value already. And so I saved these gains and just move on because I think there are better chances in the market. I was able to deposit another $9,975 out of these two sales of Airbus and Krones, and then also it was payday, and so I was able to deposit another $1,112 also from my pay. And so let's have an overview over my portfolio right now. First of all, take a look at the pie of my portfolio, and then you see even after the new buy of F5 and the adding in the other stocks, I still have a cash position of over 25%. And then you can look for every single stock you like here in this portfolio. The biggest position is in Facebook, then MI Homes, Intel, and so on. Intel, by the way, this week with quarterly earnings, and these earnings was just in line. For me, I will do nothing. I will just hold my position. I think the new CEO Pat Gelsinger really have a plan in place and just give it time to develop. Then take a look at every single stock and the performance of these stocks, and then you see Bank of Nova Scotia or Scotiabank is the best performing stock in this portfolio, followed by Coca-Cola, JP Morgan, Berkshire, and so on. And at the end, as always, I have to say, Alibaba with minus 40%. And if you're new to my channel, I will just hold this position because I think Alibaba is a great company, great business. And sooner or later, also the market will remember that. And then hopefully this will be a good investment over the long run. And just to make this round and give you an idea how I come to the overall performance, just take a look at the closed trades I did already since the start of the 2nd of December 2019. And then you see there's a lot of very good trades with Imperial Oil, Caterpillar, Walt Disney. Walt Disney, by the way, again on very interesting levels right now. I also have an eye on that. And here you just see all the finished trades already. Then, last but not least, take a look at the performance overall. And first of all, take a look at the performance in 2022, since the times are really rough since the start of the year. And then we see that my portfolio lost 4.14% since the start of 2022. And this is of course not nice if you lose, but still an outperformance to the S&P 500, which lost 7% since the start of the year. And overall, I started this portfolio at the 2nd of December 2019, and since then my portfolio have a performance of 53.65%, which is an outperformance to the S&P 500 of a little bit over 11% and to the Dow Jones Industrial Average of around 30%. Quite good, that's fine. And as I said, the times are rough and the start of the year is not that easy, I think, for a lot of you. But overall, my portfolio still very stable. I still have a lot of cash in hand. And so we will see how this will go on over the year. Because when we take a look at the fear and greed index, I started this last week, and last week it was at 43 and there was fear. This week it's at 36, so a little bit less fear. I would say if I look on this fear and greed index, yes, there is fear in the market. We are far from extreme fear and panic, and so there have to be more fear and more panic before this correction will end. But this is just a feeling, and of course it's impossible to time the market, and so I just look at every single business and try to find reasonable prices to buy new or just add to my current positions, and then sooner or later the market will follow these great businesses and the earnings of these great businesses. That's everything I can do, and then just use the irrationality of the market. Because, as Peter Lynch said, the list of qualities an investor should have include patience, self-reliance, common sense, a tolerance of pain, open-mindedness, detachment, persistence, humility, flexibility, a willingness to do independent research, an equal willingness to admit mistakes, and the ability to ignore general panic. So the best time for me, or the best time for every value investor, is when all around everybody is in panic, and then you just pick your great companies for cheap prices. This is what to do. This is what I try. And if you like this whole idea, then just follow me, subscribe to the channel, and I will give you insight to my real money portfolio every week. So that's it for today. Thanks for watching. If you liked the video, give me a big thumbs up. As I said, subscribe to the channel, and if you want to support me, because this is also a lot of work to put all of this information together, to put these videos together, then you can do that via PayPal, Investing for Generation. Thank you. And then just see you the next time. I think next video go out on Wednesday with another analysis of another stock. See you then. Take care. Bye bye.